Hello, good morning, everyone. How are we all doing this morning? Trust you are doing very well. Let's get this party started. So, if you can see my screen and you can hear my voice clearly, I will appreciate that you type in hi in the comment section so that we can get this started. So, let's see what we have in the comment section. If you can see my screen and you can hear my voice, please type in hi in the comment section. I don't know what's happening here. Is it I'm trying to load up my comment section. Let's see. Sorry, give me a moment, please. I'm trying to load up my comment section to confirm that we're on the same page together. So like I said earlier, I would like to see some hi in the comment section. If you can see my screen, you can hear my voice without distortion. Let's know that we are good to go. Okay, I see some comments now. All right. Okay, thank you very much, Brano Ruper. Thank you very much, 908818. Good morning to you. Thank you. Hey, Carrie, how are you doing this morning? Thank you very, very much. So let's take this as a confirmation that we are good to go this morning. And it's on this note, I want to welcome you all to yet another promising session on the X Trend Speed Live. My name is Sheriff Daramola, and for the next 1 hour, I'm going to be your host as we dive right into the market using technical parameters to identify trading opportunities lining up for us today. For those who are joining us for the first time, this is how we do it. So every morning like this, we come here to review our running positions and then at the same time look out for opportunities to be part of the New York session every day. So I don't know what's happening to my screen here. I'm yet to so please let someone confirm to me that everything is going on fine over there. Are you seeing my screen? Please let me know if you are seeing my screen in the comment section. So you're all welcome once again, and let's dive right into the business for today. So the first thing we normally do is to keep tabs with the fundamentals by checking the economic calendar to see if we do have any high impact events that we are going to be looking forward to. So here we are on the economic calendar. So what we normally do here is to focus on high impact events that will be affecting any of the currencies that we are monitoring this week. And for this week, we have the US dollar, the Japanese yen, and the pound sterling. So we are going to be looking at macroeconomic event that will be affecting any of these instruments. So for today, Wednesday 24, we have a handful of high impact event. We have 3 coming in from the UK docket, and we also have 1 coming from the US docket. So we have the Bank of England's governor speech, which has already happened. I'm yet to get an highlight on that one, but let's see how things goes by tomorrow. I should be able to give you an update in that regard. Then we also have the Bank of England's governor having a second speech again in about 2-3 hours from now. And trust me, everyone will be looking forward to this event to give, as we are going to be getting some insight into the monetary policy situation in the UK economy. Then later on today, I think about 7 to 8 hours from now, we are going to be having the publication of the FOMC minutes. And you all know the FOMC minute is released by the Board of Governors of the Federal Reserve, and it normally gives us a clear guide into the future of the US rate policy. So because of this, majority want to be looking forward to this one to see to have an insight into what the interest rate decision is likely going to be in the coming month. So with that being said here, and with the information we have gathered here, let's dive right into the current market structure as we get prepared for the New York session. So the first commodity we are going to be treating this morning is the US oil. And on the US oil, so far so good this week. We have been very, very profitable on this commodity, as we have been buying this commodity since the beginning of the week. So let's quickly run through how the week has started for us on the US oil spot. And what we saw here at the beginning of the week was this choppy situation where price action was ranging between the $71.85 level and the $70.65 area to give us an insight into the level of indecision in this market. And you all know how we do it whenever we have a simple flat channel like this. We want to see price action either break out of the channel, have the resistance line to give us a buying opportunity, or break down the support line for selling opportunity. And with our stop orders placed at both ends respectively, we had our first buy position for the week triggered as soon as price action broke out of that resistance line. And since then, we have been buying the US oil spot. As you can see, we saw our price action came back to retest the structure here during the early hours of yesterday. And we saw our price action broke out of our $72.50 level, giving us more opportunities to add more position to our existing trade. And during the later part of the New York session yesterday, we also had the privilege of adding one more position to our existing trade at the breakout retest of the $73.50 level. And if you had been part of this move right from the beginning of the week, you will currently be running with minimum of 3 positions running. And let's see what the first position is running with. We have about 250 pips on the first position. We have about 180 pips on the second position. And right now on the third position here, we have about 85 pips running in profit. So far so good this week. We have been quite profitable, and congrats to everyone who has been part of this profitable journey. So you all know how we do it whenever price action significantly moves in our favor. The next thing we want to be doing is to ensure that we secure the current buy position by moving our stop losses accordingly. And from the current situation we have in the market, the most appropriate area I think we can move our stop loss to is somewhere right around that $73.90 level. Let's give room for price action to breathe, hoping that price action is going to probably do some retracement in anticipation of another wave of bullish momentum. So with our position secured at this point, what is going to be our plans for today? How do we intend to take advantage of a potential trading opportunity during the New York session? Okay, 601-86786 asking which asset am I talking about? Of course, we are talking about the US oil spots. We are talking about the US oil spots. Okay. So going into the New York session today, what is going to be our plans? What are we looking out for? So the first thing we are going to be doing here is to scale up a little bit into the 4 hours time frame so that we can have an holistic point of view of what is really going on in this market, and then we come back into the 1 hour time frame to make a decision for today. Now, when we scale up into the 4 hours time frame, this was what we were able to spot at the beginning of the week. We saw our price action has been bearish, after connecting the series of lower highs, we have this trend line. And in fact, I have a couple of trend lines here to emphasize the level of strength the sellers have in this market. And one interesting thing happened in the last couple of weeks in this market. We saw how price action was ranging just right along the trend line here, with a whole lot of attempts by the buyers to break out of that structure. And not until yesterday's trading session, we finally saw price action break out of that resistant line, of that trend line, and the $72.50 level to signal a bullish momentum in this market. And coupled with this one here, and looking at what happened during the early hours of today, we have finally seen price action break out of that resistant line of that flat channel we identified at the beginning of the week, which is situated at the $74 level for the first time. Remember, we identified this channel at the beginning of the week where price action was ranging between the $74 and the $70 level since the beginning of this month, and it appears that price action is currently breaking out of that structure. So at this point in time, there are two questions we want to be asking here. The breakout of the $74 level that we are witnessing right now, is it going to turn out to be a true breakout, or is it going to turn out to be a false one? Now, judging from the 4 hours time frame, we can see that this candle still have about 1 hour 43 minutes left for it to close, so we can still conclude that this is a true breakout yet, as it could still turn out to transition into a shooting star candle, hereby bringing price back below the $74 level to incite a sell-off again. But if it happens that the price action close above that $74 level, then we are going to be looking out for more opportunities to buy the US oil spot. So let's scale down into the 1 hour time frame. Let's see how participants in this market has been reacting to the structure, and let's use what has been happening since the beginning of the week in conjunction with what is happening at this point to decide what our next line of action will be. So when we scale down into the 1 hour time frame, this is what we were able to spot. And the first thing I want us to acknowledge here is the fact that price action has been bullish since the beginning of the week. And to further buttress the strength of the buyers here, I have a couple of trend lines. So we have the first one here after connecting the series of higher lows. So we have a bullish trend line here. Then I also have another trend line, which I'm calling a temporary one, and I've highlighted it with a light pixel. So we have the second trend line here. So you can see here that since the beginning of the week, price action had consistently respected this trend line, giving us a clue of how strong the buyers are. And with this in mind, and with the breakout of the $73.90 level during the early hours of the week, we are going to be using this structure to guide our momentum. So personally, I already have a buy position running here, and for those who had missed out on this opportunity, we would have no other choice than to remain patient, waiting for price action to probably do a retracement back into either the $73.90 level or this trend line to look out for more opportunities to join or add more position. That is, if you're already in a buy position in this market. So that is how we are going to be buying the US oil spot today. So I'm advising that we remain patient here, waiting for price action to retrace back into the $73.90 area, which, as you can see, also shares a confluence with our trend line. Now, what happens if price action does not drop into the $73.90 level and instead it continues to find higher highs? So what I want to suggest here to do is that let's mark out this new structure, which is situated at the $74.40 level. And the reason why I'm going to be using this area is simply because of what happened during the last hour. As you can see, we saw how price action retested the $74.40 level here. We saw selling pressure coming from that area. So if price action does not drop into the $73.90 level to incite another wave, and instead it continues to the upside, then we want to be looking out for buying opportunity at the breakout retest of the $74.40 area. So this is how we are going to be looking out for buying opportunity. And remember that we have our buy stop, our TP target for all buy positions for this week, maxing out at the $75 level. So let's see how price action plays out going forward as regards the bullish expectation in this market. Now, in as much as we are looking out for buying opportunities, you know how we do it here. We also want to keep tabs with the expectations that sellers could also come in. So we want to be looking at the potentials that the sellers have, and what do we want to see on this chart that will make us to change our bias from bullish to bearish. Well, since we already have a trend line which has been supporting this bullish momentum since the beginning of the week, we want to see price action breach that trend line to give us a signal that sellers are likely coming in. And the first one here, we have a bust stop around the $73.90 level, which also shares a confluence with our trend line, where I want to see price action break down that structure to give us an insight into the potentials that sellers might likely come in. And if price action breaks down the $73.90 level, remember, we are not getting too excited here. We are not having a sell stop order, but instead we want to scale down into our lower time frame to look out for confirmations, which will definitely reflect on the chart as a retest of structure. So it could be a retest of the $73.90 level or the retest of the trend line, but most importantly, we want to see reversal patterns, selling pressure right below the structures to give us an opportunity to sell. And one thing about this structure as well is that as soon as we sell, remember this is going to be a counter trend opportunity considering what has been happening since the beginning of this week. So we want to ensure that we be on standby to move our stop losses accordingly as soon as price action moves in our favor. And remember, we also have a bullish trend line here where it depends on how price action reacts to the structure that will determine if we are going to be adding more sell position to our existing trade or even probably get ready to buy at that point. So let's be on standby and continue to monitor price action. Further breakdowns of the structure will be welcoming more opportunities. So we are not going to be selling the USOil spot today unless price action breaks down, retest the $73.90 level. So this is what we are going to be looking out for today on the USOil spot. If you have any questions, feel free to let me know right in the comment section, and trust me, I am willing to be of help in that regard. I can see 603. Good morning to you, 603. All right, so in the absence of no questions, I want to assume that we're on the same page here. So I will be moving on to the next option. And the next option we are going to be treating this morning is the US Tech 100. On the US Tech 100, we have been profitable in the last 24 hours. As you can see here, we have been selling the US Tech 100 since yesterday, falling according to our plans. So let's run through what has really been happening in this market since the beginning of the week, after which we look at what has happened yet in the last 24 hours, then make a decision as a result of the current structure we have here. So at the beginning of the week, we acknowledged the fact that price action was a little bit choppy, as we had price ranging between this $13,825 area and the $13,745. So we had the privilege of buying the US Tech at the beginning of the week after price action broke out and retested the $13,825, and in fact we enjoyed this move all the way up as price action moved over 100 pips in our favor before this old bearish momentum began. And during our live session yesterday, we acknowledged the bullish momentum since the beginning of this week by connecting the series of higher lows, giving us this bullish trend line that you can see on your screen. And what we agreed here yesterday is that if price action continues to remain above that bullish trend line, we shall feel comfortable in our buy position. During our live session, we were around this area here where price action was consolidating just right around that trend line, which also shares a confluence with our 13,825 level. And what we said here is that if price action remains above this area, we want to buy. And to make things a little bit easy for us to be able to capture that buy opportunity, we identified a structure here at the 13,850 where we agreed that a breakout of that structure retest will be welcome in the buy position, which never happened actually. And the opposite was what happened. Remember, we said a breakdown retest of the trend line and the 13,825 will be welcoming our sell position in this market. And as you can see what happened, we saw price action break down, retest the level, and since then price action has been dropping to the downside. And remember, we also had the privilege of adding more position to our existing trade as we marked out key structures like the 13,780, 13,745 level as levels where we are going to be looking out for more opportunities. So if you are taking advantage of these opportunities, you will currently be running with a minimum of 3 positions running in profit. And with how many pips in total? So the first position here is running with about 180 pips. The second position here is running with about 140. That's about 320 pips move in total. And we have the third position running with about 100 pips. So we have roughly 400 pips currently in profit at this point. So well done to everyone who has been part of this profitable journey. And if you still have your sell positions running at this point, you know how we do it. The next thing we are going to be doing right now is to move our stop losses accordingly to secure the current sell positions. And from the look of things right here, the most appropriate area that we want to be moving our stop loss to is anywhere just right above the 13,675. Let's lock in this profit around this area, giving room for price action to breathe, hoping that the trend continuation to the downside will still continue. So with that being said, now with our positions well secured at this point, what is going to be our plans as we get prepared for the New York session today? Well, the first thing we would like to acknowledge here is the fact that price action has been bearish at least since the beginning of this week, at least since yesterday, and to acknowledge that we want to connect the series of lower highs. And remember, yesterday we already have a trend line, so we shall extend the trend line a little further to capture the whole length of this bearish trend. And going forward, we shall be using this trend line as a yardstick to guide our trading activity going forward. So what this simply means is that as long as price action remains below this trend line, we shall feel comfortable in our sell position while we look out for more opportunities to maximize the potential of this bearish move. And during the early hours of today, I was able to monitor what is going on in this market, and I was able to identify 2 key structures, and that is the 13,675 level, which made me to add more position to my existing trade, and we also have the 13,640, which at this point in time shares a beautiful confluence with our bearish trend line. So we are going to be looking out for more selling opportunities in this market, like I said, if price remains below the trend line. So we have a structure here. Hold on a second. I want to so we have a structure here at the 13,640 where the breakdown of that level will definitely welcome more opportunities in this market. So we can have our sell stop loss rather just right above the 13,675, which will be dovetailing to about 35 pips stop loss at that point. And let's see how far this bearish momentum will go. So there is a likelihood that we could have some choppy situation. Don't let us get worried. The fact that as long as price action remains above the trend line or above the structures, we still feel comfortable in our sell position. So that is how we are going to be selling the US Tech 100 for today. So we shall be on standby to catch any of these opportunities as we continue to monitor price action. Now, in as much as we're looking out for selling opportunities in this market, you know how we do it. We also want to keep tabs with the potentials that buyers might likely take over this market at any point in time. And if we are going to be buying the US Tech 100 today, what do we want to see on this chart that will make us to change our bias from bearish to bullish? But before I go into the detail on that one, let's scale up into the daily time frame. Let's see what is really going on there from an holistic point of view and see if the potentials of buyers can be considered from this current structure. So in that regard, I will scale up a little bit. Let's go into the 4 hours time frame first of all and see. And if we cannot capture anything there, then we move on into the daily time frame. So right here on the 4 hours time frame, this is what you can see here on the 4 hours time frame. Look at this bullish trend line, which has captured the bullish momentum since the beginning of this month, and it appears that price action has just broken down that structure and in fact did a retest of that level in the last 4 hours in this market, giving us a sign that we might likely be seeing a bearish move to the downside. So let's zoom right into the current structure, and the center of focus for today is going to be between the 13,675 and the 13,640, which shares a confluence with both the bullish trend line and the bearish trend line we have here. So as long as price action remains below this bullish trend line, we will have no other choice than to continue to look out for more selling opportunities in this market. But if at any point in time price action climbs back above that bullish trend line, then the breakdown of this bullish trend line here will be considered to be a false breakdown, while we look out for buying opportunities above that trend line. So if we scale back down into the 1 hour time frame, what structure or level are we going to be using to guide the expectation that buyers could take over this market? So when we scale back down into the 1 hour time frame, this is what I was able to come up with, and this is what we are going to be using to guide any bullish expectation in this market. So if price action at any point in time breaks above the trend line, that is break out of that trend line, then this will be a sign that the trend line may no longer have the capacity to resist buying pressure anymore. And if you look at that trend line closely, you will see that it also shares a confluence with that 13,675. So a breakout of that structure will definitely get us prepared to be part of a bullish move. But remember, we are not getting too excited here. We want to wait for confirmations to happen, as a breakout of that level could still turn out to be a false one. So we want to see price action retest the 13,675 or even retest the trend line. Most importantly, look out for buying pressure to join a bullish momentum to the upside. So this is the only way we are going to be thinking of buying the US Tech 100 for today. A breakout retest of the 13,675 is going to be what we are going to be looking out for to buy the US Tech. But if this does not happen and price action continues to trade below the trend line, we feel comfortable in our sell positions while we look out for more opportunities to add to our existing positions. So that is that on the US Tech 100. If you have any questions, feel free to let me know right in the comment section. So moving on right now, we are going to be moving into the next pair. And the next commodity we are going to be looking at today is the XAUUSD. So let's see what is really going on the XAUUSD chart. And look at what we have here. So since the beginning of this week, we have been selling the XAUUSD. And remember, at the beginning of the week, we acknowledged the $1,980 level to be serving as our key level for this week. And you know how we do it whenever we have key levels. We want to buy if price action trades above our key level, and we want to be thinking of selling if price action trades below our key level. And if you look at what has been happening since the beginning of this week, you will see that price action has been trading below the key level, giving us signs that sellers are still very, very strong in this market. And we had a very choppy situation during the first, I think the first 20 hours of the week. We saw our price action was ranging between the $1,982.35 and the $1,971.50 level. And you know, when we have this kind of simple flat channel, we have no other choice than to remain patient waiting for price action to either break out of the resistance line to give us buying opportunities or break down of the support line to give us selling opportunities. And as you can see, the later was what happened here. We saw price action trigger our sell stop order at the breakdown of the $1,971.50 level, and we saw the price move significantly well in our favor, right back into that area around the 1,955 area with about 180 pips in our favor before this old bullish momentum began. And if you remember, during our live session yesterday, we acknowledged the fact that price is back within our demand zone. Remember, we had this demand zone around the 1,957, which was also respected during last week's trading session too as well. We saw that as soon as price got into this area, we saw our buyers negated all attempt by the sellers to break down that structure. And as a result of this simple structure we had here, we anticipated that price could probably go to the upside. And in order for us to capture that bullish momentum, what we did here was to scale down into our 15 minutes time frame to look out for a simple setup that will be able to guide our trading activity. And this was what we found on the lower time frame. So this is the key level, had a 1,957, and we spotted a reversal pattern where price action did continued rejection of that demand zone, and we had a key level, a neckline at the 1,960, where we agreed here yesterday that if price action breaks out, retests that 1,960, we are going to be in for a buying opportunity. And this was exactly what happened. I think about an hour or two into the New York session yesterday, we saw price break out, retest that neckline at the $1,960.50 level, giving us an opportunity to buy. And we also had the privilege of adding more positions at the breakout of the 1,964. And if you are taking advantage of these opportunities, well done to you for being on standby to catch this move, as you will currently be running with about 145 pips in profit if you still have your buy positions running. And that is on the first position here. And if you are taking advantage of the second position, you will currently be running with about 120 pips in profit. So well done to you guys for being on standby to catch this opportunity. And you know how we do it. If you still have a buy position running right now, you want to be moving your stop losses accordingly to lock in this and secure this current position. And the most appropriate area I think you could be moving your stop loss to at this point is that area just right below the $1,974 level. Just below that structure seems most appropriate. Between the 1,974 and the 1,972 area seems most appropriate to move in your stop losses at this point. So please do that immediately at this point. Let's secure this current position. Now that we are getting prepared for the New York session today, what is going to be our plans? What are we looking forward to on this commodity? Well, I already have a simple flat channel that we are going to be using to guide our trading activity for today. But before we go into the details on that one, let's run through the higher time frame. Let's see what is going on from an holistic point of view and see if the potentials of buyers is looking more possible than the potentials that sellers have in this market. Now, going up into the 4 hours time frame, this is what we were able to identify at the beginning of the week. So the first thing we did here on the 4 hours time frame at the beginning of the week was to acknowledge the fact that price action has been bearish since the beginning of this month. And to do that, we connected the series of lower highs, giving us the resistance line of that descending channel. And then we also had the support line of that descending channel figured out too as well. And one interesting thing that happened during the course of this week was the fact that as soon as price action tested the support line of that descending channel, we have been noticing buy pressure resume in this market. Now, looking at the structure we have here, considering the impulsive move that started last week to the downside, we saw that as soon as price got into the 1,957, we saw a sharp rejection, bringing price back into the 1,980. we saw price action drop back again for the second time, but was unable to break down the previous low, which is a sign that buyers are gradually gaining momentum. And if you look at the structure closely, you will see that price action is gradually transforming into a reversal pattern in the form of a double bottom structure. And you know, when we start identifying a potential reversal pattern like this, the next thing we want to be doing is to identify a neckline which shall be serving as a platform that will be validating the potency of this double bottom structure. So with a neckline sitting coincidentally at the 1980, which happened to be our key level for this week, we have a neckline figured out at this point. And what will be confirming this reversal pattern is for price action to break out of the 1980 to give us an opportunity to be part of a trend continuation to the upside. So we have been buying the XAUUSD since yesterday, and there is a high chance that price action might likely continue to find new highs in this market, considering the fact that sellers were unable to break down this demand zone here. So because of the situation here, we want to be having a buy stop order above the 1980 so that we can be part of the trend continuation to the upside. And remember, if this breakout happens, now we have a confirmed reversal pattern and we look out for more opportunities to be part of a bullish move. Then there is one thing I would like to acknowledge here too as well, and that is the fact that if price action breaks above the 1980, you will see that price action will be back at a very strong buyer's territory. And this makes it more likely that if price breaks out of that area, we are going to be having a bullish momentum for the later part of the week. So let's see how price action reacts to the structure during the next couple of hours and even prior to the FOMC. And I'm very sure there's going to be a very huge volatility that will bring price up to the upside or downside from this level. So with this whole information we have gathered here, and like I told us that we are anticipating a breakout of the 1980, let's see how we are going to be taking advantage of price movement on a lower time frame. I think I just lost my network there. Let's see. Hello everyone. Sorry for the break in transmission. We had some internet reception issues we had to resolve, and things are quite good and fine. So if you can see my screen and you can hear my voice, let me know in the comment section so that I can know that we are good to go, or if there are need for me to do some adjustments. Thank you very much as you do so. Okay, so we were talking about the XAUUSD actually, and we were able to spot a reversal pattern in the form of a double bottom structure after considering the impulsive move that started last week. And then we saw this retest of the 1957 area where price was unable to break the previous low, and the inability of price action to find new low appears to negate the potentials that sellers have in this market. And for the fact that we have a new higher low here, I'm of the opinion that we might likely be seeing a reversal pattern mature at this point. And what we are looking out for today to confirm the validity of this reversal pattern is for price action to break out of the 1980 to the upside to trigger another buy position for us. So as a result of this, we have agreed here that we are going to be having a buy stop order above the 1980 to be part of the trend, let me call it that way, to the upside. So since we already have a buy position running, I've told us all to move our stop losses accordingly to secure the current buy position while we wait out and see if price action will be doing a breakout of the 1980. So let's see how price action plays out, and at this point we could have our TP target at the $2010 area, which also shares a confluence with the resistant line of that descending channel we identified earlier, and that will be dovetailing to about 300 pips plus to catch here if price action really moves in our favor. So going back into the 1 hour time frame, let's see what is really going on here. And if you look at what has been happening here in the last in the last 18 hours now, you will see that price action has been very choppy. Price action is caught within a range between the 1980 and the $1971.50 level, which gives us an insight into the level of indecision in this market. And at the same time, we want to relate this to market participant waiting for a signal in the form of a catalyst, which we all know we are expecting a high impact event coming up later on today. That is the FOMC minute. And as well, we're still looking forward to a resolution as regards to the US debt ceiling saga going on at this point in time, giving us an insight into that level of indecision that we have here. Now, in as much as we're looking out for buying opportunities at the breakout of the $1980 level, we might also want to consider the potentials of sellers here, which I'm not going to I'm not keen to be part of actually. And the reason why I've said that is simply because of the structures we identified on the 4 hours time frame, and the fact that price was unable to break the low here to find new lows. For me, is a sign that buyers are still very strong in this market. So as a result of this, even if price action breaks down the support line here at the $1971.50 level, I will see it as a retracement of this impulsive move that started yesterday, leading to the breakout of that bearish trend line that we identified at the beginning of the week. And it might likely be a retracement into the structure to retest the trend line to incite another wave of bullish momentum. So you can see that things are still looking very bullish at this point in time, even if we do have a breakdown of the $1971.50 level. So, but if you are a scalper and you are someone who loves taking counter trend opportunity, you could take advantage of that opportunity at the breakdown of the $1971.50 level, with a TP target at the 1,957, which will be dovetailing to about 150 pips to catch there. But if you are not someone who feels comfortable scalping or taking counter trend opportunities, I would advise that you stay clear of this position and wait for price action to come into structure, probably somewhere around the 1,964 or the 1,957, to look out for structures that will support a trend continuation to the upside. So these are my views here on the XAUUSD. I'm holding on to a bullish bias here, waiting for price action to break out of the 1,980 to give me an opportunity to add more position to my existing trade. And if price action breaks down the 1,971, I said I will be waiting at the 1,964 or the 1,957 to be part of a trend continuation to the upside. So let's see how this plays out in the next couple of hours, and just ensure that you move your stop losses accordingly on your current existing position. So that is that on the XAUUSD for today. If you have any questions, feel free to let me know right in the comment section. So in that regard, I will be moving on to the next commodity, which is the XAGUSD, which was introduced to us by Steamroller. And I hope Steamroller is still in the house. If you are, please let me know if you are. All right. So since the beginning of the week on the XAGUSD, we have been selling this commodity. So far, so good this week. And what did we see at the beginning of the week that made us to sell the XAGUSD? Well, the first thing we acknowledged at the beginning of the week was the fact that price action was a little bit choppy, which took quite the hold of the day. That was on Monday. Throughout Monday, we saw how price was ranging between the $23.90 level and the $23.64 area to give us an insight into the level of indecision at this point. And you all know how we do it whenever we have this kind of simple flat channel. We want to wait for signals to come in the form of either a breakout of the resistance line for buying opportunities or the breakdown of the support line for selling opportunities. And as you can see here, it was the sell stop order that was triggered in this market, and since then we rode the move all the way to the downside as price action moved about 55 pips in our favor before we started seeing the sell pressure resume in this market. And don't forget that we had multiple entries, as we had positions at the breakdown of key structures like the $23.50 level and the $23.40 area to maximize the bearish move in that market. And one thing we agreed here yesterday is that depending on how price action reacts to the $23.15 level will determine if we are going to be adding more sell position or getting ready to be part of a retracement wave. And one thing I said here yesterday is that we want to see price action break down, go down to your lower time frame to look out for retest of structure to join that decline. But as you can see here, it was a buy pressure that began. And one thing I also made mention here yesterday is that if buy pressure resumes after we had moved our stop losses to secure the current sell position, that we don't need to panic, as we might likely be seeing a retracement of that impulsive move. And we said as long as price action remains below the trend line, we shall feel comfortable in our sell position. So as price action came back into that key level, did a retest of structure a couple of times, you must have had a sell position triggered at this point. And if you have a sell position triggered here, just like me, kindly move your stop losses right now to your entry point to secure this current position, as it is very, very likely that buyers are coming in at this point. Now you might be asking me, why am I thinking that buyers are likely going to be coming in here? So after price action tested the $23.50 level, as you can see here, expecting that price should continue to the downside. One thing we have observed here since the early hours of today is the fact that as soon as price action got into the $23.40 level, we saw that buyers had continued to negate all attempt by the sellers to push price further to the downside. And because of the situation we have here, I'm going to be considering a bullish momentum. And as a result of this one, I want to be having a buy stop order sitting just right above the $23.50 level so that we can capture that bullish move. And if you look at the structure closely, a breakout of the $23.50 level at this juncture will also have taken out all the sell positions along the bearish trend line that we identified here. So a breakout of that structure will definitely have taken out all the sell positions and welcome opportunities for buy positions. And if it so happens that price action comes back to retest, then we shall be looking out for more opportunities to be part of the trend continuation to the upside. So at this point in time, I'm holding on to a bullish bias where I'm going to be positioning myself above the $23.50 level, which is just right above that trend line, to be part of a trend continuation to the upside. However, in as much as we're looking out for buying expectations in this market, let's also look at the potentials that sellers have here. Do sellers have an opportunity to push price to the downside from a technical standpoint? Well, the only way I want to be selling the XAGUSD today is to see price action take out the buy positions at the $23.15 level. Remember I said earlier that we have seen buy pressure along this area during the New York session yesterday, and we want to see price action take out that position for us to start considering selling the XAGUSD. And another thing here is that we could actually maximize the bearish expectation if it so happens that price action wants to go to the downside. And to do that, I want to see price break down the $23.40 area, see signs that buyers are finding it difficult to climb above. So this will reflect on the chart as continued rejection of the $23.40 area. Then we could join the decline and then have a sell stop order below the $23.15 level to join or add more position to our existing trade. So this is how we intend to sell today if price action drops below the $23.40 area. But I'm still of the high. I'm still holding on to a bullish bias. I still think that a bullish momentum is more likely based on this current structure, and with a new potential demand zone along the $23.40 area, we are likely going to see price action take out all the sell positions along the trend line, breaking out of our key level at the $23.50 level to trigger a bullish momentum. So let's be on standby to catch these opportunities as we continue to monitor price action. So I will be moving on to the last pair for today, which is the USDJPY. And on the USDJPY, we have been buying the USDJPY since the beginning of the week. Remember, we took advantage of the bullish momentum after price action broke out of our channel at the 138.00 area. Remember, we had this flat channel figured out here where price action was initially ranging between the 138.00 and the 137.500. And with our buy stop order above that structure, we had our first buy position for the week as price action moved about 70 pips in our favor. And of course, we definitely must have moved our stop losses accordingly to secure the position before we were taken out with a small profit. And in the last 24 hours here, we have noticed that price action has been very, very choppy, ranging between the 138.750 and the 138.400 level. And at this point, you all know how we do it. Whenever we have a simple flat channel like this, we want to remain very patient, waiting for price action to either break out of the resistance line for buying opportunity or break down the support line for selling opportunity. And with the case scenario we have here, I already have a sell position during the early hours of today after price action hit my sell top order to push price to the downside. But unfortunately, we are currently running in a loss. If you took advantage of that opportunity, we are currently running in a loss of about, how many pips is that right now? About 7 pips, and hoping that price action will still continue to the downside. So we are still holding on to our status quo here on the USDJPY. We have a range between the 138.750 and the 138.400, where a breakout of the structure, probably at the resistance line or the support line, will be welcoming a trading opportunity. And if it so happens that price action breaks down the support line here at the 138.400. We want to be looking out for more opportunities at the breakdown of the 138.00 level to add more position to our existing trade. But if price action breaks out of the 138.750, I already have a buy stop order sitting above the structure to capture that move all the way to the upside. And one of the reasons why I have a buy stop order at that point is simply because of this bullish engulfing candle that happened here during the early hours of today to give us an insight into the presence of buyers within this old structure that we have here. So let's see how price action plays out in the next couple of hours, and by tomorrow we shall be coming here again to review how well these pairs have been doing, and at the same time get ready for the New York session tomorrow. And it's on this note I want to call it a day here on the Extreme Speed Live. It has been a wonderful moment, though we had some little issues as we had network went out, but I'm very glad that we were able to complete the session and prepare ourselves appropriately for the New York session today. I do hope you had a wonderful time, and I'm looking forward to seeing you same time tomorrow, 10 a.m. UTC, 11 a.m. West African time, as we come here again to review how well this pairs has been doing, and at the same time get ready for the New York session tomorrow. Do have a wonderful evening, everyone. Bye bye.